Right, everyone, welcome back to Crypto Brain. As always, we focus on structured analysis, market behavior, and smart money activity rather than emotional speculation. So if your goal is to stay ahead of the market instead of reacting late, you are in the right place. Now, in today's breakdown, we are going to analyze something very interesting, a potential confirmed pump scenario, supported not just by price action, but also by derivatives data. So this is not going to be a surface-level view. We will go deeper into what the market is actually doing beneath the chart. Let's begin with the SPX6900 chart. At the start, what we can clearly observe is that price is not behaving randomly. Instead, it is holding within a structured range. There is no aggressive breakdown, no panic selling, and most importantly, key levels are being respected. This type of behavior typically indicates that the market is building a base rather than showing weakness. Now pay close attention to how price reacts around support. Every time the market dips, it does not collapse, it stabilizes. This tells us that buyers are stepping in consistently, absorbing selling pressure, and when pressure is absorbed rather than rejected, it usually suggests accumulation. As we continue moving forward on the chart, you will notice that price begins forming higher lows. This is a subtle but powerful signal. It indicates that buyers are gaining control gradually and sellers are losing dominance over time. This is often the early stage of a bullish shift. Now, before jumping to conclusions, we move into confirmation through data, and this is where things become more interesting. Let's now shift towards CoinGlass and analyze the derivatives side of the market. Starting with open interest. If you observe open interest carefully, you'll notice that it is increasing alongside price stability. This is a critical signal, because when open interest rises, it means new positions are entering the market. Now, the key question is, are these positions supporting the move or opposing it? If price is stable or moving upward while open interest increases, it often suggests that traders are building positions in anticipation of a move. This aligns with accumulation behavior we observed earlier on the chart. Now let's look at the funding rate. Funding rate gives us insight into market sentiment. If funding remains relatively neutral or slightly positive during this phase, it indicates that the market is not overheated. There is no excessive leverage imbalance, which is actually a healthy sign, because strong trends usually begin when the market is not crowded. When positioning is balanced, the move has room to expand. So combining open interest and funding rate, what we are seeing is a market that is quietly building positions without excessive hype. And this is exactly the type of environment where strong moves tend to originate. Now let's return back to the SPX6900 chart for final confirmation. As we scroll forward, we begin to see price pushing towards resistance levels. But this time, the behavior is different. Instead of sharp rejection, price is holding closer to resistance. This is known as pressure building, and when price builds pressure under resistance, it increases the probability of a breakout. Eventually, we see price attempting to break above key levels, and more importantly, it starts sustaining above them. This is where the structure shifts from accumulation into expansion. Now linking this with the broader narrative, Toshi pumping confirm, what we are observing is not just isolated movement. It is a combination of structured price action and supportive derivatives data. This alignment increases the probability that the move is not random, but part of a developing trend. However, it is important to remain disciplined. Markets do not move in straight lines. Even within strong trends, there will be pullbacks, consolidations, and temporary pauses. These are not signs of weakness. They are necessary for continuation. So the key approach here is not to chase the move blindly, but to observe how price behaves after breakout. If support levels hold and momentum continues, it confirms strength. If not, then the market may return to consolidation. At this stage, The structure is leaning towards a bullish scenario, but confirmation must always be respected. So stay analytical, stay patient, and most importantly, stay objective. Because the traders who focus on structure and data are the ones who consistently stay ahead of the market, while the majority reacts emotionally. Thank you for watching, and make sure you stay connected with Crypto Brain for more professional and high-level market analysis.